Over the past few weeks, I've been covering some companies in the NGS oncology space through the lens of an Invita investor. Hello everyone, welcome back. My name is Arias, and today we're going to be talking about Guardant Health, a precision oncology company with some technology that might set them apart in the MRD and recurrence monitoring space. Let's get right into it. First, let's start off with what Guardant Health does. Guardant Health is a precision oncology company focused on cancer eradication using all manner of testing. They have tests in the market to target cancer in all phases, from screening to therapy selection and response analysis to recurrence monitoring. This full suite of cancer tests sets them apart from others we've covered like Exact and Natera, as they are covering a more narrow portion of the oncology testing landscape. Guardant also has a biopharma development team for hire that helps pharma companies set up and administer clinical tests for their new cancer therapies, among other things. They have laid out all ambitions to target multi-cancer screening, which are much more credible than other companies because of the data that they will have. Now, let's get into what they do. First is therapy selection, which is their most mature and developed business. They have Guardant 360 CDx, a liquid biopsy test which profiles 55 genes of any solid tumor to better select the best therapy. It is FDA approved and approved as a companion diagnostic to recommend a few specific treatments for non-small cell lung cancer and breast cancer treatments. It also has an average selling price of $2,600 to $2,700, which is very high. On one hand, it's great to see that this test provides enough value to earn such a high reimbursement price. On the other hand, they need to bring the cost down of this technology so that they can provide more tests to the masses when the benefits are not as concrete, such as in screening. Just to do some quick math, they had 60% gross margins in the precision oncology testing part of their business, and with an ASP of $2,650, that would place their cost per test at approximately $1,000. This will need to get significantly more affordable to screen the masses one day. A few years back, in a Big Ideas report, ARK Invest estimated that tests like multi-cancer screening will start to be adopted at a $1,000 per test price point and would really take off at $500 per test. And they have a long way to go to get below those prices and still keep their margins. Moving on to the next test, Guardant 360 Lab-Developed Test, or LDT, is a therapy selection test for advanced cancer treatments once a patient has completed the standard of care. It tests 80 cancer-related genes to enable an even more personalized cancer treatment recommendation than Guardant 360 CDx, and has been used over 300,000 times by clinicians. Next up is Guardant 360 Response, a blood-only liquid biopsy that can view changes in a patient's ctDNA to better help doctors understand a patient's response to a particular treatment. According to the company, studies have shown that Guardant 360 Response has predicted treatment response 8 weeks earlier than current standard of care radiological and image scans. This gives clinicians valuable time back to try additional treatments if it didn't work as intended, or to hold off if it did work as intended. This sounds like a very useful test that could bring extremely meaningful benefits to patients, and I'm excited to see adoption expand. Finally, for the therapy selection portion of their business is Guardant 360 TissueNext, which is a tissue-based test to identify cancer patients who would benefit from biomarker-informed treatments. This type of test is less differentiated and more common, but appears to be a play on two things. First, it's a synergy play with the rest of their liquid biopsy products. Second, they clearly state that the currently available products to physicians and patients have experienced long delays in getting results to physicians and high failure rates because of an inability to obtain enough tissue or high-quality DNA for analysis. In the end, this hurts patients, and Guardant is looking to solve these problems with their offering. Moving on to a newer part of their business with more room for faster growth is their recurrence monitoring, MRD, and screening parts of their business. First is their offering for MRD and recurrence monitoring. This offering sounds similar to those from many others, including Invita, Natera, and planned by Exact. However, Guardant's is the first and only, according to the company, to be Medicare reimbursed in the tissue-free biopsy space. Outside of reimbursement, their test seems to function similar to others in that it can detect cancer recurrence sooner than traditional methods using ctDNA and be used to initiate additional therapy if needed. The reimbursement sets it apart for now in what is shaping up to be a very competitive market. Moving on to their Shield test, which is a blood-based colorectal cancer screen released just this last May. It uses tumor DNA in the blood as well as epigenetic signatures to detect CRC early. It reportedly has a sensitivity of 91% and a specificity of 92%, which are the two numbers that can quickly quantify how accurate the test is. These numbers aren't quite as good as Cologuard's next generation test, but they should get much better adherence because Shield only requires a blood draw. Cologuard is probably still the superior test, as it is much better at detecting precancerous polyps than Shield, but it is nonetheless very impressive to see these sensitivity and specificity numbers, from a first-generation blood-based test, and I think this represents a serious challenge to Exact's hold on this market. As a reminder, a colonoscopy has about 95% on both of these measures, so both of these tests are getting pretty close. They are expected to expand this technology into lung cancer screening and then into multi-cancer screening, which are both massive opportunities. They are fairly far along in getting their lung cancer test off the ground, having already started enrollment in a 10,000-person study. Shields for CRC and lung are massive opportunities, but as I have said many times before, multi-cancer screening is the beginning of the end of cancer as we know it, which makes it the greatest commercial opportunity on the horizon for this company. Guardant also has a variety of offerings for biopharmaceutical companies. They have their Guardant Omni test, which expands on Guardant 360 LDT while still keeping its performance characteristics. While Guardant 360 LDT measures 80 genes, Guardant Omni measures 500 genes, including genes associated with homologous recombination repair deficiency and biomarkers for immuno-oncology applications and microsatellite instability. This test is used to provide clinical insights for treatment development companies, which should be an expanding market with more treatments in development. Next is the Guardant Infinity test, which takes advantage of Guardant's next-generation liquid biopsy technology. It offers genotyping coverage of more than 800 genes with sample-level methylation detection and tumor fraction score for biomarker discovery, and is typically used by researchers in therapy selection and response monitoring. This next-generation liquid biopsy technology is very intriguing, and we'll talk about it a bit more in a moment. They also have two platform-based offerings. One of these is Guardant Connect, which helps connect clinical trials with patients through a large network of oncologists developed through the provision of their tests. This helps fill clinical trials earlier and sooner, accelerating development timelines, and helps patients get the treatments they may need. This is a pretty interesting platform, and I could see it being super valuable for companies trying to accelerate clinical trials. Their other platform, Guardant Inform, is a real-world data platform with a large clinical dataset. It has data on over 60 cancer types, tons of cancer treatments and procedures, and many patients with more than one Guardant 360 test for comparisons. While this test may be a valuable cancer-focused dataset, it has a relatively modest 175,000 patients, which is significantly smaller than Invitae's, for example. Despite that, both of these platforms should be useful in speeding up and improving clinical outcomes for companies that choose to utilize them. Now that we know what their business does, let's take a look at their financials. Q2 revenue was $137 million, up 26% year over year, strong growth in this environment. They had outstanding gross margins of 61%, which fluctuated down a few points year over year due to lower margins revenue from their development and services part of their business. This includes their biopharma offerings from their last slide. They managed to keep operating expenses flat compared to last year, which is prudent given the state of capital markets and will help them in their drive to profitability. They had an adjusted EBITDA loss of $85 million and negative free cash flow of $100 million in the quarter. This is a reasonable loss rate for the moment, given their capital position of over $1.2 billion in cash and equivalents. I would only label this as an okay capital position, as they do have $1.15 billion in convertible notes outstanding. These are largely due in 2027 and convert at roughly $140 per share. While the stock is currently well below the convert price, if it were to convert, the dilution from that event wouldn't be abysmal at around only 8%. This capital position was improved in May by a $350 million offering, upsized from $250 million at $28 per share. While a bit of a discount to today's levels, it shows strong interest from investors and really bodes well for the continued financial well-being of the company. Moving on to some news and other notes on the company, they recently resolved all of their pending litigation with one of their biggest partners, Illumina. It all started a little over a year ago when Illumina sued Guardant and its founders, who used to work at Illumina, for stealing their IP to start their business. Guardant responded with some direct language, calling the lawsuits frivolous and retaliatory for Guardant encroaching on the multi-cancer screening market which Illumina was targeting. But earlier this year, a judge dismissed all of Illumina's claims, and as I said earlier, this month they agreed to settle all of their pending litigation and renewed a long-term supply agreement. While I did mention earlier that they have received Medicare reimbursement in some situations for Guardant Reveal, they also have for Guardant Response and Guardant Tissue Next, which should decrease barrier of entries in the years to come. Lowering barriers to adoption will help unlock the full extent of the markets that they are targeting. As estimated by the company, the therapy selection market and recurrence and MRD markets are worth about $10 and $20 billion, respectively. However, the screening market they estimate to be worth over 3 times both of these markets combined, at around $100 billion. I don't think that these numbers factor in significant expansion internationally either, leaving more upside for these gargantuan opportunities. This is why I'm so interested in companies in this market, because of how big an opportunity they have to solve one of the biggest medical problems in the world today, cancer. Guardant may be one of the best plays on this with what they call their smart liquid biopsy platform. They claim it can achieve 100 times the genomic breadth of other tests and 50 times the sensitivity without increasing the cost. This should allow for much better tests in terms of accuracy and should yield more insights all at the same cost. They should already have Shield, their CRC screen, and Guardant Infinity, their liquid biopsy for biopharma companies, on the smart liquid biopsy platform, and are looking to migrate Guardant Reveal, their MRD offering, sometime in 2023. They claim this should provide a large improvement over other liquid biopsies, which could finally start to differentiate their MRD offering. They also plan to move Guardant 360 and Guardant 360 Response to the smart liquid biopsy platform as well. Shifting back to their CRC screening tests, they expect that when you look at test performance and test adherence, that Shield should lead to the most CRC detections. As you can see on this table, while Shield isn't the best performing test, it has much higher adherence, or people actually following through and taking the test when they should. You combine that with the performance, and despite the slight decrease in performance, Shield should save the most lives overall. The only other thing that I point out here is I don't know if this chart takes into account Cologuard's increased performance in detecting precancerous polyps or their next generation test. However, with the ease of use being so much higher for a blood-based test, I would expect the general trend to still hold true. They expect a similar increase in overall effectiveness for their currently in development lung test as well, which they're aiming to get approved in 2026. They expect excellent long-term performance from the franchise and are expecting $5 billion in 2032 sales, which would be a 10x in just this product line of the whole company's current revenue. They also expect this at 60% plus gross margins, which should be massively accretive to the stock price. I'm super excited to see Shield develop, as I think it can really do a lot of good in this world. Now let's take a step back and think about how they compete with Invitae. The two don't overlap in a few areas. Guardant doesn't compete with Invitae anywhere outside of oncology, including in rare disease, hereditary testing, including for cancer, or in the women's health business. These are traditionally strong parts of Invitae's business that Guardant doesn't challenge whatsoever. Invitae, on the other hand, in comparison to Guardant, doesn't have a specific therapy selection test or any broad cancer screens, or expanded bioinformatics tests for research. These are good businesses for Guardant, but aren't going after particularly large markets outside of the CRC screen. The two areas where they do compete is in MRD and recurrence monitoring, and in the data business. While Guardant's data may be more useful in some situations due to its specific nature, Invitae has over 10 times the number of patients enrolled. As I'm sure you know, volume matters in data for machine learning. As for the MRD side, I wish Invitae had more valuable information on their MRD offering, but it nonetheless appears that Guardant is significantly ahead in this area. This matters a lot to my thesis, especially with how crowded this market is. Guardant also has further structural advantages, as they can use some of their current relationships in distributing therapy selection tests to aid in the growth of the MRD business. This is not to say that Invitae doesn't have any connections, but I think Guardant's should be much stronger given that most of their business comes from oncology testing. The two also both have ambitions in the multi-cancer screening market. However, Guardant is much further along here, having already launched their first screen and well on their way to launching a second. Another advantage that Guardant enjoys here is their vastly superior capital position. They both have over $1 billion in debt, with Invitae having actually significantly more. They both have very similar revenue levels at about $500 million this year. However, Guardant has over $1 billion in cash, while Invitae is now below $350 million. Invitae has narrowed their losses further than Guardant, but this is because their situation is so dire that they have to. For some perspective, when Guardant recently raised money through a share sale, they raised more than Invitae currently has on their balance sheet in total. Invitae are currently closing down what will be profitable businesses in the future and delaying development of future products in favor of conserving cash short term because they have to. This is not a good position to be in, and it's really starting to show with Invitae announcing they're closing their pharmacogenetics business in Q2. This comparison shows me where I wish Invitae were with growing businesses, a stable management team, and lots of momentum on their side rather than pulling against them. On Guardant's Q2 call, they also had some interesting comments on what their future will look like that I didn't mention here, and you can check those out on X if interested, link in the description. Next for me with Invitae, I will cover their earnings and likely go through on a high level and look at their competitors. If you'd like another video discussing any other Invitae competitors, let me know in the comments below. Thank you so much for watching and have a great rest of your day.